Here we go.
Okay,
All
we're
right, I think we're
live.
live. We're
Yes.
live. Welcome everyone. This is the meeting of the Tax Review Commission. Calling it to order. It's 2:02 p.m. Hawaii time, March 17th, 2026. Again, this is Tax Review Commission, and this meeting was appropriately noticed under the Sunshine Law. Next, we'll call a roll, and I have the roll here. I'm going to call it in reverse alphabetical order today, just to mix it up. All right. John Yasuda.
Present, and no one's in my office.
Excellent. Thank you. Next up, Jeff Uyoka.
Present. No one's in my office.
All right. I think I skipped myself. I'm here and I am alone in my office. Next up, Stacy Katakura.
Present and alone in my office.
Awesome. Mark Fukunaga.
Quite lonely and present.
Great. Jessica Enos.
Present and alone in my office.
Cool. And Judy Chalk, Vice Chair.
Present and alone in my office.
Cool. Full house once again. We have a quorum. Thanks for being here, everyone. Next item on the agenda, communication to the commission and public comment. So Bybars, has there been any communication that you've received? Oh, you're muted right now.
I have not received any written communication, so I'm just checking the chat box.
Okay.
I don't see anything currently. We can wait.
Yeah.
For a
Yeah,
few.
we'll pause in case anybody wants to give live testimony or chat or anything like that. And you can submit testimony written or live at our meetings. There's information about that on the TRC's page, which is also on the Department of Tax website. Doing this in case anybody's out there trying to unmute themselves. All right, I think that's been long enough. I'm not seeing anything. So let's move on, and we can discuss and possibly approve the minutes from the last meeting. The minutes are part of the meeting materials that you received. Are posted on the web page, and there's a recording of each meeting also available on the web page. I think everybody's had an opportunity to review the minutes. I have. Are there any changes to the minutes, or is there any request for extra time to look at the minutes? All right, not seeing anything or any discussion on that, so I'll ask for a motion to approve the minutes, I guess.
I move to approve the minutes.
Thank you. And we're
I'll second.
cool. All right, we have a motion to approve the minutes. All in favor will raise their hands. Excellent. And that was everybody, but just in case anybody opposed to approving the minutes. All right, so we've approved the minutes for last time. Cool, thanks everyone. So next thing on the agenda, I mentioned this last time, I was gonna try to contact somebody about this. I reached out to the author of this Principles of Sound Tax Policy for Hawaii document, which is part of the report for 2 sessions ago. He remembered the document, he was open to dealing with it, or to updating it. But subject to change, I guess, I think it's expedient to focus on the main consultant question and that RFP. We got to get that done and get that out. And we'll talk about that later. And we'll take votes and stuff on that, hopefully, later today. So I want to put off pursuing this for now, and or at least for now, if not forever, and see how far we get with the main consultant question. So any questions on that? If not, we'll move on. That's just my report. I did contact somebody outside, so I wanted to report back how that went. All right, cool. The next thing is moving right along toward the break on the agenda here. We'll have to move that if we go too fast. Discussion of the GET presentation and slides from the previous TRC from 5 years ago. We discussed having a look at the old presentations, and the GET one was the one we kind of identified. I had a look at it. I don't want to put anybody on the spot, but if you have anything to say about that, go for it. A couple takeaways I had that I'll share just to provoke discussion and see what y'all think. there was a lot of data before he even got into the GET. I didn't remember that. One thing was the Pew Charitable Trust data on state tax revenue volatility. And Hawaii scored pretty well. I went to the Pew Charitable Trust website to find that info, and they update that periodically. And the numbers were all higher now. So volatility has gone up overall. I didn't dig any farther than that. Hawaii still scored pretty well. And according to the presenter of that, the presentation last time, by Barr's predecessor, corporate and personal income tax are kind of volatile, and consumption tax is less volatile. And our GET is this extremely broad consumption tax. So that's probably responsible for it. That, and then something else I thought was interesting and kind of highlighted some of my priorities was there was a separate chart once he got into the GET, showing that the state GET rate, okay, not including county rates like the county surcharge, it's just been flat since 1962 or whatever the year was. And other states' rates have gone up. And he highlighted that because the language in the GET is so broad and it taxes everything as the economy has evolved toward services and digital and stuff like that. The GET has captured that ordinary sales taxes focus on tangible personal property, and a limited number of services haven't. And so that's led to upward pressure on the rates in those states and lack of that in Hawaii. To me, that highlighted two things that are important to me that we might become part of the report or not, which is that the GET, the broad GET, regardless of its warts, is a good consumption tax, and kind of the best thing Hawaii has going for it. And not poking holes in that is one of my priorities. And that lack of volatility and the stability of the rate, the lack of upward pressure on the rates as the economy has changed, were two of my takeaways from that presentation. Any other reaction to the presentation or to what I just said?
Yeah, I did have a couple of things, Jonathan.
Cool.
One, yeah, and I read through it. I mean, there was good data in there, but a couple of thoughts. One, they just measured whether it was regressive under kind of the dictionary meaning, but without a lot of context, which is to say, how regressive is it or progressive? And what they concluded, obviously, GET is obviously regressive, and the context with income taxes, it overall were progressive. The thing I would question, though, is that they really looked at it, like I said, without a lot of context. And so I would say there are two things on context. One is that the great majority of states that have sales taxes exempt groceries and drugs. In fact, on their drugs, I believe of the 45 states that have state sales taxes, 44 exempt drugs. Guess who doesn't? Well, and we're not sales tax to be technical, so that we're probably not that 45th state sales tax state, but we do not exempt drugs. And then on the groceries side, again, I would say there's something like 45 sales taxes states again. And out of that, I would say there's about 8 that do tax groceries, but 5 of those tax it at a reduced rate. So not the full sales tax rate. And second, so it comes down to, I think, 3 states in addition to us that do not exempt groceries. So I would say first context where I found a little lacking was not enough comparative data, so you can really assess, well, how regressive, how progressive should we be in the bigger world? I would say the other thing that it didn't really think about, and this is more recent data, but UHERO's been doing some interesting work in terms of the combined effect here in Hawaii on the combination of average income and average expense. And I may have mentioned this briefly on a prior meeting, but basically their data showed that when you combine the two, Hawaii expenses have Hawaii's always been expensive, but today it's no more expensive than it was in 1969 relative to the rest of the US. Proportionately, it's still about the same rate. It's growing, but it's still more or less the same. What's really changed is Hawaii incomes have flatlined since 1990. So we used to grow incomes here, nominal incomes at the rate of 3 or 4%, which would then keep pace with expenses. 1990, when the end of the Japanese bubble happened, annual growth in incomes nominal went to 0.5% a year. And then fast forward to 2005, it even flatlined even more, 0.2% CAGR, annual growth. So it's essentially flatline. And what's happened from 1990 is the lines have crossed. It used to go like this together, and now expenses are still going up, but incomes have flatlined. And so when you look at those two things, what UHERO found was Hawaii ranks with, I hate to mention our cohorts, West Virginia, Alabama, and Mississippi. That's where we rank out of the 50 states when you combine the two. So you take that fact, which also is supplemented by what, 40, I think the estimate is 45 to 50% of our population is what they call ALICE, asset light, income constrained. Essentially, families who are 2 paychecks away from homelessness. That's the ALICE population. So you put that overlay of really pinched Hawaii families with a regressive tax on food and drugs. That's the other missing context I wonder about. So what may be acceptable in a state with healthier income growth maybe is the stuff in this state that pushes people to move to Vegas, as they are. We're losing population. So I thought in those two respects, the consultant's report was short. It wasn't enough.
Can I just interject just quickly? It was not a consultant report. So this presentation was by the previous tax research and planning officer, Seth Colby. So those only represent his views.
I was sorry, Baybars. I was looking at the 2015-27 TRC where they retained what, PCM?
Oh, I see. Okay, you're talking about it. Oh, okay.
Yeah, we're talking about 2 different things. It's no problem.
Yeah. Okay.
Yeah.
Okay, that makes sense.
Yeah, I appreciate that, Mark. And I realized right away we were talking about 2 different things, but we're talking about the same thing. So I'm with you. The only thing I'll add about regressivity is there's a couple arguments about regressivity that happened, and they were in the former TRP officer's GET presentation because he had to cover it because GET. And one is a lifetime consumption argument, which is that you consume a higher share of your income because your income's so low when you're a kid and a college student and stuff like that. And then after you retire, because depending on what we count as income. And so if you do that and you assume everything away, then it's basically nothing can be regressive because everybody consumes everything. And then the other argument is that the whole tax system should be looked at rather than just a single tax type. So the income tax, progressive income tax, and this GET that is regressive, that funds a lot of things and allows for some room for the income tax to be used in more and more progressive ways. Combining all that takes away some of the regressivity. I like one of those arguments and I don't like the other one. I don't like the lifetime consumption argument because I think the idea is food on the table right now, not it's cold comfort to say when you're 80 years old, you'll be consuming more than your quote unquote income because your income is artificially low because we don't count stuff as income or whatever. But the system, to look at the GET in a silo, I think will be a little unfair to it.
Yeah, I agree. I think the policy question is, if you make the excise tax less regressive by exempting groceries and drugs, you got to make up the income shortfall. So I think presumably you got to make the income tax more progressive. You know, higher brackets, bigger percentages and higher brackets. I would not, and maybe this is another subject for the committee, I would not go to wealth taxes, which are currently being pushed a lot by, I think, progressives. Bernie Sanders introduced, I think, the federal wealth tax bill. Gavin Newsom's like wrestling with the California wealth tax bill. You know, he's against it because he thinks he's going to lose a bunch of Silicon Valley billionaires. Anyway, there's a lot of stuff on wealth taxes. That's the other area you could potentially go, but I really wouldn't want to go there. And maybe that's something we could study as well.
Yeah, just one quick note though. Prescription drugs are not subject to GET, just to clarify. So they are exempted already.
Yes,
But
you're right.
what is not exempted is non-prescription drugs.
Yeah.
And then the other thing is there is also an exemption for benefits purchased with SNAP and food stamps. So those are exempted, and also women and children, the welfare benefits. So and then there is the food and excise tax credit on the individual level for to offset the consumption expenditures, GET expenditures of lower income households. So we have some, but just not a full exemption for the totality of it.
Totally agree, Baybars. Yeah, the tax credit for food and drugs helpful, and yes, on prescription. I just wonder about the overall, when you measure it overall, and you probably have to throw in on the income tax side, the earned income tax credit as well. But looking at the whole thing, I think might be helpful.
So I'm hearing some valuable information for our prompt to when we discuss consultants later. Is that what I'm hearing, Mark? You studied that old report. That sounds good.
Yeah.
Couple of things I'll mention from the GET presentation. He discussed pyramiding. We could probably hear more from that about that from Baybars. I got a couple contacts if we want some variable data points on that. And the regressivity, back to that, always, I was going to cover that too. Always fascinates me. It does the lifetime consumption argument and the total tax system argument. It's a complicated subject. So if you're into that, check out that video where Seth, the former TRP officer, covers it. Good information. And then and the other one that we identified last time was the income tax presentation. You can find a link to that in the materials for last time, or just go to the TRC page. Click on that. And then, you know, studying the old TRC reports is helpful as well. Anything else on that? Any other comments or reactions to the GET presentation from last time, or anything we've said? All right. So let's move to the next topic, and that is brief presentation from Baybars, tax credits, I think. This is in response, I believe, to some stuff we were discussing last time. Baybars, please.
Thank you. I put together a few slides, but depending on what the commission, which direction the commission wants to go, we can do something more in depth. So this is going to be quite brief. This is in response to the questions last time. So the tax credits in general, right? They reduce the tax liability of at the individual and business income taxes and insurance premiums, public utilities. What makes them valuable is they reduce the tax liability on a dollar for dollar amount, rather than like itemized deductions, which only reduces taxable income on which taxes are assessed. And if you look at the tax credits that are currently in effect as of tax year 2023 in our latest tax credits report that is produced by our office, Tax Research and Planning Office. 70% of those tax credits go to reduce individual income taxes, and they're claimed by individuals. So that writes off about 13.3% of their tax liability. Now, the write-off is larger for corporations, about 40%, but they have other reasons, and the overall corporate income taxes make just a tiny fraction of all the tax collections. So I will talk about them separately. Overall, the purposes, if you were to kind of divide them into different purposes, we see that about close to 40% of these tax credits are actually to avoid double taxation and pyramiding of the taxes. So that makes a big chunk of the tax credits that go to the businesses. The ones that are for promoting social welfare, like the earned income tax credit, the food and excise tax credit, those ones, they make up the next 35% of all the tax credits are in that list, and the rest are to encourage certain industries. I'll highlight a few of those. So,
Baybars, before we
yes.
go there, can you give a little bit more explanation on the avoiding the double taxation? That's what, the wholesale GET on top of the retail GET?
No, these are tax credits. So I will identify a few specific ones in the next couple of slides. So
Okay.
let me,
Sure.
if I cannot answer it at that time, please do ask further questions. Before we got there, I just wanted to see like what was the argument in the past tax review commissions is that they pointed out that these, well, they also looked at GET exemptions, but in today's presentation, I'm just looking at the tax credits. For the same reason, they shrink the tax base. So the amount that is subject to taxes of the incomes that are subject to taxes is shrunk, which means to be able to provide the same services, the government services, this would result in higher tax rates than otherwise on the remaining tax base. So, and this is the main argument of making it less efficient from an economic standpoint, and also most oftentimes it might also make them less equitable. Although part of them are actually targeted tax credits are trying to address inequity in the income distribution. So, partly it makes it less equitable if it's not targeted that way. But overall, the tax credits that we have are either refundable or non-refundable in nature. The non-refundable ones are only up to the taxpayer's liability, whereas refundable ones, even if one has zero or negative, even if they have zero tax liability, the refundable nature makes it possible to get a refund more than one's tax liability, or it could be seen as a subsidy in this case. So for that very reason, if you look at the lowest income group, the ones that are making less than $10,000 of Hawaii adjusted gross income, the value of the tax credits as a share of their tax liability is 8 times more than their tax liability. And this is precisely because this income group does not have almost any tax liability. So this is the form in which they receive subsidies to help the lowest of the income groups. Then, you know, the majority of them, the largest two of those are, as we mentioned, the refundable food and excise tax credit. This is the mostly, this is claimed by about a third of all the taxpayers. So it's an important one, and it represents 10% of all the tax credit amount goes to refundable food and excise tax credit. Another major one is, you know, there's the federal earned income tax credit. So The Hawaii also offers a state version, so which is equivalent to 40% of federal EITC. This is also refundable. So this is targeting low, but also moderately low to moderate income families. So those are the main ones, but obviously there is the tax credit for child and dependent care expenses. That is a smaller share. That can target not just low and moderate, but middle income families as well. So on the other side, if you look at which industries, so renewable energy technologies income tax credit is the major one. It costs about $100 million of claims, reducing the tax liabilities. The next one is the film industry tax credit. Those are the major ones. Now coming to your question, Mark. So the capital goods excise tax credit. So this is to reduce the pyramiding of the general excise tax. So it rebates the businesses for the GET that they spent on business to business transactions. So, but this only applies to eligible capital equipment. So if you buy a capital from one business in Hawaii and it doesn't get doubly taxed. So this is one way to get the tax credit. But the other one is to avoid double taxation. If the company has paid some taxes to another state or a foreign country, that can be deducted as well, so that we don't get taxed twice on that same. The pass-through entity tax credit is actually, as you know, this is a revenue neutral thing where this is to get around the SALT deductions, the state and local taxes deductions that were capped at $10,000 previously under the TCJA 2017, the first Trump administration tax bill. So this was a way to for individuals who are members of S corporations and partnerships to be able to pay taxes of these pass-through entities at the entity level, and then whatever they pay at the entity level, then they don't pay also an income tax on top of that at the individual income tax level. So overall, it's supposed to be revenue neutral. So that's what is meant by avoiding double taxation. Like you don't end up paying taxes twice if you've already paid taxes on it. Now, so what were some of the recommendations that the past TRCs have looked at? And so we go all the way back to like 1980s. So these eliminating or sunsetting tax exemptions and credits was something that did come up quite a bit. And so the idea was that by automatically including a sunset date, this would trigger a review of all these tax credits and exemptions, whether they should be continued or not. And so that they would also be able to ensure that they're meeting the goals. So what has been done is, well, some credits did get enacted with sunset dates, and some have been repealed over the years, but then the ones that were repealed got replaced with different ones. And even some of the tax credits that have expired, like 6 of the 7 that have expired for more than 20 years ago. And there are still claims for these because these are non-refundable in nature. So you can carry over the unclaimed past tax credits indefinitely in the future. So as of tax year 2023, all of these are still claimed. And not only that, number of tax credits have actually expanded over the years. So it's peaking at 22 tax credits as of tax year 23, which is the latest report data point we have. The other type of tax credits that the past TRCs have looked at is the so-called business incentive tax credits. So they were identified looking at maybe doing a cost benefit study of a tax credit programs, maybe disclose the beneficiaries of tax incentive programs and things of that sort. As recently as 2020, the one previous tax review commission to this current one, they did recommend requiring public disclosure of the identity of the claimant and amount of credit claimed for all the existing and new business incentive income tax credits. So part of this, so some of the reporting requirements have been incorporated into, for instance, the motion picture, the film industry credit does have a reporting requirement. It's handled by the film office at DBET. Similarly, there's reporting required for renewable fuels production tax credit. So various agencies are involved in these. And then most recently, there's been a legislation which asked the state auditor to periodically review these exemptions and exclusions and credits under the GET and individual income tax and other income taxes. So they're supposed to look at like what are the tax expenditures of these exemptions and credits? Did they achieve the purpose of the legislature in enacting them? What is the impact on tax equity and efficiency? So some of the questions that that you have been asking, so they have been tasked with that. So if you go to their website, I provided the link and the URL for it under the section titled Tax Reviews. So Office of the Auditor has been publishing these since 22, and they have different reviews of exemptions, GET exemptions, but also different individual income tax exclusions, and including the tax credits. If you just look at the latest one looked at these 4 tax credits, for instance, their latest report in January 2026. Again, I provided the link and the URL for it. They just looked at these 4 tax credits, the one for child and dependent care expenses, low-income household renter credit, food and excise tax credit, and the one for the child passenger restraint systems. They determined that all of these 4 credits do meet the stated or purposes that they were able to infer, and they recommended them to be retained. But in some of the previous years, for instance, the December 2023 one, they had a bit more difficulty. They were not able to determine 3 of these 6 provisions that they looked at, whether they achieved their primary purposes when they were adopted. And they basically said this is primarily because lack of data. And then there was the legislature also was not clear what outcomes they intended to achieve when they passed these tax credits. There was no clear indication from the bills themselves or their legislative histories. And then in terms of figuring out like lack of data question, they recommended maybe that other state agencies should be tasked with doing the cost benefit analysis. Like the enterprise zone credit or the commercial fisher fuel tax credit. So maybe the Energy Office, DBET, some other agencies, they recommended them to look at that. So basically, although they're supposed to be, conducting independent, objective audits and studies on effectiveness of the agency operations, they don't have ready access to specialized economic data. So this is like, so the intent was there. The auditor has been tasked with it, but at times they had difficulty in identifying or assessing whether they're meeting their goals, and they have not been able to make a recommendation. If they're meeting their goals, what is their recommendation? Retain it or not retain it? That was not possible. So to give so this is all from still the December 2023 report. This is what it looks like. They kind of go and dig deeper. So overall, I think this is a positive thing to do, where they look one by one, all the tax credits, right? They look at the history of it. They utilize some data that is available. So we provide aggregate data for them, and they also can come and, DOTAX provides this data, the amount of in this case, tax credit for qualified business in an enterprise zone. So, but does it meet its purpose? That one was left unanswered. So this is all I have for now, but I'm happy to provide further presentations if needed, or answer more specific questions. But we do have this tax credits report that we annually publish. So it does list everything. All the statistics are there. But I think for purposes of the commission, that's where, a consultant study comes into, like, the value of it is understood a bit better. So rather than providing statistics, when it comes to offering opinion or analysis of a different kind, I think commission might find it useful to hire consultants to achieve just that. So that's all I have about tax credits. So I wanted to keep it brief. Any questions?
Yeah, thanks, Baibars.
Yes.
Go ahead,
Hey,
Mark,
Mars,
please.
I guess the question is, for example, with enterprise zones, is measuring the increase in economic activity. Who do you think in the state, if the state auditor's office can't do it because they don't really have those kind of analysts, who do you think in the state should? I mean, I don't know if we should necessarily want to do a once every 5-year consultants report when it's such a, ongoing and important issue.
Right. So there are actually multiple bills in the current legislation as well. So ones that I've seen were, I typically, where are the economists located? They're typically at DBET. So they get tasked with things like that. So there's a resolution, the House passes a resolution, and they're asked to do a study on it. And then obviously they would need some funds being appropriated. So this has happened in the past, and then they might hire some consultants, let's say, to still they might rely on a consultant to actually do a survey of businesses. And they might also need some legislation to for disclosure of some of the information, right? And whenever that kind of thing happens, we also provide whatever information that is available that we are able to provide, at least at an aggregated, anonymized way. So DOTAX always gets involved in terms of providing reliable, objective data to the extent that it's possible. But typically, where are the economists in the state? They're typically at DBET, but I hate to add one more thing to their list, so I'm not gonna I'm not gonna suggest one way or another, but typically that's where it happens.
Thank you.
All right. Any other reaction to that, Baibars' presentation? All right. Baibars, do you know if when you were looking at it, have they looked at the capital goods excise tax credit or the refundable food excise tax credit? Do you remember seeing those two?
Right. So it was mentioned in one of them that they wanted to look at it more carefully, the capital goods and
Okay.
excise tax credits.
The reason I asked it, those are so specific. And
Right.
as you mentioned earlier, capital goods is meant to cover the potential pyramiding. Are they going to look? I mean, I remember these bills, but I don't remember the details of them bills. Like, are they going to look at them that specifically to try to see if it's covering the regressivity or if it's covering more or covering less? Is it
Oh.
that dialed in? Because when I saw like your excerpt, it had, you know, numbers claimed, the amount claimed, dollars per low income resident, and then goals met, check or no check, you know. So
Right.
is it I guess what I'm asking, is it up to the auditor to determine like how much of it is up to the auditor to determine what to look at? And
Yeah, they just rely on what is available. So if there's a study already made on it, then they can use it. And otherwise, they don't have economists on their team or statisticians, really. They
yeah,
have some analysts. So they're, I think, limited by what information is already available. So either through tax, low tax, or DBET, if they have done a study.
yeah. I guess what I'm asking is kind of a dumb question, is because I mean, you need an economist and you need the data to answer the question. But what I'm talking about is the source of the question and the framing of the question. Is the question going to be framed as, is this covering the pyramiding? And then
I
after
see.
that, you need economists and
Right,
data.
right.
And I guess the reason I'm asking is because something I heard on the last meeting, it was from Mark, about developing a framework to evaluate these things. That's the one thing, that's something I haven't seen past TRCs do. When you had that chart up earlier, they had, you know, so many of them have looked at this. So I'm just trying to, I'm just thinking about that. Because they seem so different, you know, the difference in the credits. Some of them are so targeted. Like I've quoted the refundable food excise tax credit 100 times as something that's supposed to cover the amount of GET that low income people pay on food and stuff. But like, is it really dialed in close enough? I don't know. That one seems objective. Others seem kind of subjective. That's all. Is there any other reaction or questions for Bybars on that?
Now, where
If not,
are the slides from that?
Oh yeah, we're gonna post them publicly on the, and then it's gonna be
Oh.
shared with everyone. Yeah, I was literally making them until like 5 minutes prior to the meeting. So
Oh, okay, thank you.
ledge time.
yeah.
So that's all relevant to stuff we're going to talk about later, I think. So that's not the end of this. If you have questions later, that's fine too. Any other questions for now, though? We'll move on if not. But that's not the end of this. So if you want to.
Right. This was not a comprehensive
can.
presentation in any way, and wasn't meant to be, just to get
Cool.
to get the conversation started, really.
Sure.
So Chair, you want me to move on to the next one? Yeah.
Yeah, let's move to the next one, and I think we can cover the next two, and then we'll take a break. Go for it, Bybars.
So let's see.
This is a presentation about the process and timeline of hiring a consultant. And this will kind of inform how we talk about the next topic, which is discussion of hiring consultants.
Right. So I said I would do a little bit of homework. I'm not had to hire or be involved in hiring consultants myself. So I did reach out to our fiscal and budget program under the Administrative Services Office. And this is some of the requirements that that was brought up. So basically, we would need to be doing involved in a procurement process, and this would be a competitive sealed bidding. What that means is we need to post. This is the same thing for all state agencies. Request for proposals. This would need to post for 30 calendar days, and there would be an evaluation committee, and they would review the proposals, and the winner would be based on a set of criteria that the commission determines, which could also include the price. And then they would have some scoring and all of that, and then the highest score gets the award. So that's in terms of what the evaluation committee would have to do. My initial thought was it would be, just maybe at the very least the chair and vice chair of the tax review commission, but then I found out that they need to be minimum of 3 government employees, and none of the commission members would be considered government employees, so they will be considered as non-government employees. So it's okay for to have maybe ideally at least 2 members from tax review commission to be part of this evaluation committee. So I volunteered myself and another PhD economist from our office, Sisi Zhang. And then our fiscal and budget program, Emil Acosta, the supervisor of that area, he will be the official contract administrator. Although he will not be directly involved in the evaluation process, he will be overseeing the whole thing. But eventually, after that evaluation committee does its, the RFP is posted, some evaluation is done, a contract will be entered between DOTAX and this consulting firm, and so our fiscal office handles all the paperwork. So, and that's why we provide the support services. It also has to be approved by Attorney General's office. They'll need to review and sign that very contract. What does this mean? Like what timeline are we talking about? Let's say if we post, and this is a sample timeline. So if you post in April 6th, so let's say we said at least a month. So by May 11th, the proposals would be due. And then let's say we take about 2 weeks to evaluate and then come up with a notice of award to the vendor. And then let's give it another couple of weeks to get the fully executed contract. This is assuming everything goes on track. And then for maybe a July 1st start date. So I know it's a bit of a tight one. So that's why the earlier we start, the more time that will be for a study to be done, and also for the commission to evaluate and incorporate that into their final report. One thing that that was mentioned last time is like in the last commission, there was one study that was commissioned to researchers from University of Hawaii. Since it's a state agency and the individuals were not paid directly, the payment was done to the UH, so it was exempt from the procurement code. So this process that I just mentioned, the competitive sealed bidding was not, not necessary in that regard. And there are some other details, I think there were, in addition to this, but some researchers were hired to actually write the report itself. So that's like a requisition for professional services. Did I stop sharing? I think so, right? Okay. Yeah, so again, those are other details that I'll have to find out, but the reason I wanted to bring up the urgency of the timeline and how long these things take, I just wanted to put it out there so that the commission can start thinking about maybe hiring a consulting firm to do the big study and identifying some of the questions that they might want to pose to them to direct them. But I'm available for more questions. Again, I don't have all the answers, but I can always go and check with our fiscal personnel to find out more.
Sure.
Thank you.
Thanks, Baibars. So I think any questions on the specifically on the timeline and requirements?
Maybe just to clarify that last part
Sure.
by ours. So if we hired UHERO, for example, that would be exempt from the procurement regulations.
Yes, if it was directly if it was directly UHERO, I believe that is the case, but I can't check that. But if you hire a specific person, like who works for UHERO, incidentally, that would have to go through the procurement process. But if
Got
the
it.
money goes directly to the state agency, including UH, then they have their own structure, like their part of it goes for overhead and whatnot, and it doesn't directly go to the people doing the study. You know, it goes to fund their research, so
Got
to
it.
speak.
Thank you.
Yeah, you're welcome.
And on the requirements there will be three, just to remind everybody, there will be 3 employees that are direct employees of the department. Bars identified those. And then 2 from the TRC, or thinking to add to that. The scope of that bars is, maybe, correct me if I'm wrong, to finalize the RFP language that the rest of the commission, the entire commission develops, and then wait for the proposals to come in, evaluate every proposal, and then determine winners, if any.
Correct.
All right, and then after the winners, if any, are just determined, that evaluation committee would be over. They wouldn't have like a contract management role later and stuff like, or how is that done? Is that done through a mill or whatever?
Good question. I believe that then it would be over, but you know, because that's the main task, because it's just evaluation committee.
Sure.
Yeah, there might be other tasks later on that the commission might decide.
Okay.
They can appoint another one.
All right.
Yeah.
Okay. I'm just trying to dial in the scope before
That makes sense.
before I ask members of the commission to help with this. All right. So unless there's other questions on the timeline and requirements, I'd like to move to the next agenda item, which is very related. So, all right, let's move to that, and discussion of hiring consultants. We talked about this last time. There seemed to be an appetite, interest in pursuing consultants, and we just heard some information. So just to be safe, we're getting close here. So I want to address this with a motion. There was some interest last time from Cynthia to do this. I think it's time. So I'm asking for a motion for the TRC to pursue 1 or more consultants with the exact topics and scope to be decided later. Y'all are agreeable.
So moved. Oh,
Awesome. According to the book, we got to have a second.
Oh, second.
Thanks. All right. So that's the motion, is just to officially vote to pursue a consultant. So all in favor of that, let's raise our hands. That's everybody. Okay. Nobody in opposition? Anybody in opposition? All right. Cool. So that's out of the way. So about the evaluation committee that Bars discussed, he identified the department staff. And I was hoping to not be part of that. So I'm hoping for 2 volunteers to help with that. And I have 1 person in mind, and that's our vice chair, Judy Chalk. Judy, will you?
Yes.
lead?
Yes,
Awesome.
I'm willing to serve on the
Cool.
commission member side.
All right, cool. Thanks. All right, that's 1. Anybody else interested in dealing with this? Oh, Mark, excellent. That's 2. All right. So unless there's some objection, we'll go with that. This is not the same.
Just don't give us a boring topic to explore.
Oh no, y'all are all going to be involved in developing the RFPs and stuff. So yeah, that's if I could get out of that by volunteering for this, I would, because that's going to be the hard part. Okay, so that is our evaluation committee set. we've taken a motion to pursue a consultant. We're pretty well on track. We've been at it about an hour, and the next topic is the break. So we didn't do this last time, but I think I've got it set up, well, we've got it set up with Rick and everybody. They're going to pause the meeting and stuff. What do y'all think? A 10-minute break? Is that agreeable? You want to do 15? I'll say 10. We'll end early if we
Yeah,
can. If
10 is
if
good.
we- Okay,
Yeah.
cool. Let's do 10. All right. So Rick's got some stuff behind the scenes, but still yet, turn off your cameras, turn off your mics, and avoid discussing any TRC business during the break. All right. See y'all in 10 minutes.
Okay, recording restarted.
All right. So we're back from our break. That was a quick 10 minutes. Might make it 15 next time. We'll see about that. All right. So next topic is back to the themes and topics for the commission. And this continuation from last time. And it's going to, we're just going to start, tuning this in to what we put into the RFP. So I have a list here written down. I'm going to read these off. This is the best I could recollect from last time. So I'm doing this, and I'm stalling right now so y'all can think. I'm doing this to make sure I'm not missing something. And that if anybody that brought any of these up wants to add some language to these, because I just put the basic, just a few words to capture it from my scribbled notes last time. So this is what I heard last time. I heard credits and exemptions and are they working? And I heard framework to evaluate credits. I heard the general topic of regressivity, competitiveness of the tax system. And then I heard wealth tax. I heard climate change resilience, and policy shaping housing affordability. So reactions to that list, additions to that list, and then we're just going to go from there. Did I leave anything out? Or does anybody want to add anything?
Jonathan, how are you thinking this would work? We would send out an RFP with all these topics?
No, I think, I mean, this is for all of us to determine, but I guess my vision is we're going to spend some time right now putting our heads together and try to hone these a little bit, triage these maybe, determine what is a matter of things we can ask to Bars and his staff, things we can research on our own, and then things that are priorities for the RFP for the consultant. So I guess one of the topics or one of the questions is which ones of these are for the RFP for a consultant or consultants, and which ones are not. So I'll give you an example of something that's not on the list is the topic of long-term care financing. I forgot to put on here. That's from the Senate resolution. That's probably not a topic for the major consultant. If we have one major contract, one major consultant, because they're going to be focused on tax. And what I heard last time is that topic is not really tax. It's a matter of you coming up with ideas for other alternatives for providing care and funding the care. So that's kind of what I want to get out of the next however many minutes we got. So yeah, your question is a good one. It helped me communicate that. In the shortest of short terms, so I want to make sure I'm not leaving anybody's topic out that came up last time. There was a lot of stuff. All right. So I'm gonna, the long-term care thing, I have that as an agenda item too later on. So, I heard earlier, discussion of regressivity and some issues with the way or some shortcomings of the way a previous tax review commission or previous consultant's report covered regressivity. That tells me that's something for the consultants to look at. Is that incorrect? Or what do you think about that? I'm just trying to triage these.
I'm kind of starting to think that regressivity has been pretty well-traveled ground. I mean, there's been a fair amount of work
Okay.
already done. I'm not sure we're going to be able to add. I mean, I
Okay.
think we can add to it, but I think we can really do it within the Department of Taxation as opposed to hiring a consultant. I mean, it's really looking at other states maybe and things like that, but I don't know, that would be my first reaction.
Sorry, so
Thanks.
I have another question. So we
Yep.
hire the consultant and then the consultant does their analysis and comes back and says, whatever we think, yeah, the GT is regressive, whatever. And then we take that report and our job is to propose like changes to the tax system. Is that what we're trying to do? Or what is our job ultimately? And like we get the report and we're saying we should change the tax system and do ABC or?
Yeah, I think we can propose changes. I
Or
think
is it
that's the
just-
main thing.
Or is it to just say that, the consultant has determined the tax policy or GET is this and income tax is that? I mean, is it just to state like what was found, or is it to state what was found and say, come up with a proposal of, so therefore we suggest you do this.
Y'all can add to this, please. I mean, commission 7 people, but my vision is that we will make sharp, deliberated on
proposals.
recommendations.
Okay.
And so if we identify issues and topics and stuff that we like, and we develop an RFP for the consultant will come back and say something, and then we turn that into a practical, thoughtful proposal for the ledge. Because to me, the consultant is likely going to be PhD economists, and they're going to come up with economist stuff. And if they wanted that, they can do that on their own without us. So we have a couple of roles. One is to identify the topics and the prompt for the consultant. And number 2 is to turn that into something, to translate that into practical policy that the 7 of us support. I'll give you an
Okay.
example on regressivity. One of my favorite topics, the lifetime consumption thing. That's accurate. I mean, it's economics. It's like 100%. It's pure econ. Like lifetime consumption, all that works out and all that. But it's pure PhD econ, and that's not what that's not our role.
Yeah,
so our role would come in. I would say, if I was writing the report on my own, I would be like, well, yeah, that's there, but I don't think that the state of Hawaii and its social policy should be focused on lifetime consumption. I think we're focused on putting food on the table on this day or that day or this day or that day before school. That's that's our role, I think, between the consultant's report and our ultimate report.
Okay, so I guess with that in mind, then, and like Mark mentioned, I think regressivity has been well, looked at, and maybe,
Okay.
Is there anything more that if we hired a consultant for that we would have any kind of better recommendation? Because I think it seems established. I don't know.
Okay.
Yeah, I think
Yeah.
Maybe we can have the consultant focus on something different. I don't know.
Go ahead, Mark. You're about to say something.
Yeah, I guess the specific question is, would we create a grocery and general drug as opposed to prescription drug exemption? And then raise income tax progressivity to pay for it. It's really what it comes down to. I mean, and I'm just guessing a consultant can not only analyze, they can also look at alternative tax policies to push and how you do it, right?
Yeah, I think so. I think I just want to make sure I'm not getting confused here. What I heard earlier is maybe regressivity has been covered. So maybe not a consultant thing from that. But if we think they do have a role, I don't want to. I'm kind of hearing the
Like maybe if,
Two.
like what the impact would be if we put in an exemption for, you know, all drugs, over the counter and prescription drugs, and an exemption on groceries, like what that impact to the regressivity situation, like how that would impact it, maybe more specific, not so much like, is it an
that's
issue or
very
not?
specific.
Yeah.
Right. And I'm seeing reactions from other people. I'm not missing those. But I'll react to that by asking Bybars, is that something that your staff could do, or is that something that the consultant would need to do? So I heard a couple of things there while you're thinking. Number one, just a pure revenue impact of a grocery exemption and a over-the-counter drug exemption, and then number two, an impact on the regressivity of the GET.
Yeah, what I've observed is that even when there was a consultant report, like if it involved actually using tax data, like DOTAX would be involved in providing these revenue estimates. So the one thing I can tell you, for instance, GT exemption for groceries, I've done a lot of revenue estimates for that myself. That data is not tax data. We actually have to rely on Census Bureau consumption patterns of people, what percentage of income is spent on food and groceries, and like these consumption expenditure surveys. And the reason is, if you look at the general excise tax returns, there's no item for this is for food or anything like that. It's just retail, wholesale, you know, so we have no idea how much of that is for food, but we have some idea. We know how much consumption, you know, we know how much economic activity takes place, right, in different industries and things like that. So we kind of approach that. Our job would be definitely providing any tax data and technical expertise. But I have seen, I think organically, like the way I kind of saw it is maybe a consultant was tasked with something, and then while they're working on it, the commission discusses some ideas, and maybe there's something specific they ask. And then I think that's when like our office got involved and maybe did something specific to answer that. I would need to ask people around here, but a lot of the people who have worked on these have either retired or are not with DOTAX anymore. So I'll try to find out some more. But my guess is there have been like for instance, the former tax research planning officer has a chapter that is in the appendix. So those are unpaid. Obviously, those are, you know, something that was that came maybe as a presentation, and then maybe he put that in there. So stuff like that might happen organically, but it might be more to fill in the gaps, and we would be involved even with whatever the consultant is doing. We would be involved in providing some estimates, some data that they wouldn't have direct access to. That makes sense.
All right. So, all right, I don't have any thoughts right now. Stacy, you've been unmuted for a while. Did you have something to say, or you just happened to be unmuted?
Hey, forgot why I unmuted. Sorry.
Okay. I'll react faster next time, so you don't have time to forget. Jeff, you were reacting earlier. Did you have anything to add on here?
No, I like it. That was a good idea. I don't know how practical it is because I doubt there's a lot of original ideas. It sounds like Bay Bars and all you guys over there have studied about every possible concept on Earth. So, but
Yeah.
always good to get a new set of eyes on it. So good idea. I like
Okay.
it.
Because
Okay.
how was it determined that whatever the food and excise tax credit dollar amount is, it would represent the GET on the food that group spends? Like that must have been studied somehow, right, to get that number? I mean, is it maybe like that number should be adjusted or?
Mhm. I don't know the history of that. But that, I mean, speaking of regressivity, that is the kind of thing I would personally, that I bring my position is that's the kind of thing we should address with regressivity
I
is
see.
income tax reactions to regressivity in the GET, not GET exemption reactions. So it's up to the 7 of us at the end of this to vote, but it's going to be hard to convince me to vote to recommend a grocery exemption or an over-the-counter drug exemption. I like income tax reactions to it because I like that big, broad consumption tax. And we can discuss that at length. But right now, what I'm hearing is, I'm not sure what I'm hearing. Is there room for, or do we want to submit the regressivity question in some form to the consultant or not? Jeff, please.
Just a quick question. So
Sure.
didn't the governor just pass some kind of huge income tax cut thing, but because of the state of the economy and sorry, I'm not in the tax field, so I understand about this much of all of that side. So would it be worthwhile studying an income tax adjustment right now as there literally is on the table like one of the biggest income tax cuts this state's ever seen, from what I understand? That's just my question. I don't understand it well enough, so purely a question.
Yeah, I'll let anybody react to that. I think there was a bill passed last year or 2 years ago or whatever, and then I think there's a bill to undo some of it even.
Yeah,
I think we were suspended, right, from 2027 to prospectively after that.
yeah.
The benefits were suspended, something to that effect.
Yeah, I think
So-
that's right, John. I think they're deferring those tax cuts because what happened from the time they passed the bill is that you had the Trump cutbacks to SNAP and
Mhm.
Medicaid. So those two things are going to be made up by the state. And so the state's scrambling for money to fund those two things. And part of the way they're going to fund them is cut back or defer some of those tax cuts, particularly for the higher income brackets.
Understood. So I understand that's a counterpoint to addressing regressivity under the income tax if they're already if there's already a movement to increase income tax take through deferring some of that. So do y'all want to
Real quick,
yes, please.
question. One thing that I thought was kind of interesting was that was addressed in the prior TRC report was the taxation of retirement plans. And I know I don't think that's ever been addressed legislatively. I know some of the other things were incorporated, but I don't know if that's something we want to address. I mean, because they talk about it's not fair nor equitable. If you read the last report, and it's something. As a practitioner, I also thought it was kind of interesting as far as, and I know it's a big issue. I mean, I brought it up before between our colleagues, and I know it's a big issue with the legislature, but I don't know if that's something we want to look at, not potentially taxing it all, but, having maybe like some states, what they do is they exempt certain amounts of the pension. You maybe like the first 25,000, 50,000, and then anything after. I think it will help the burden of compliance. We don't need to know whether the funds are, employer funds. And I think it makes it more fair in the sense that if someone's getting a $300,000 pension and some, older person gets, takes distributions from their IRA, self-funded IRA for 20 grand a year, that guy, the 20 grand a year guy won't have to pay tax, and the $250,000 guy will have to pay something, So I don't know if that addresses your regressivity issue, being more progressive on the higher end guys. I don't know. Just thoughts for everyone.
Can I just add just one thing, because it's
Please.
that this is the kind of information that my office can help with. So like because we have access to the tax return data, we can kind of actually point out, okay, how much money are we talking about? What is the impact of that? And then the thing about pensions is they're actually taxed. They're taxed on the way out. So when you make deductions and contribute to your pension, it is already taxed. So it's taxed beforehand, but not taxed when you withdraw it, which is, in the reverse order. So there's some amount of taxation there. And it's one of the benefits of why somebody would want to choose to work for a state. So it's got some incentive. So the state government is one of the few, and federal government for that matter, is the few that offer pension. But anyway, so what I'm trying to say is that factual things, the things you brought up about individual income tax cuts, their pause, different modifications. Again, my office is responsible for providing all the revenue estimates for all those prescribed changes. The thing that we cannot do, and that will not be our kuleana, is say, oh, this is a good policy or not. So that's where Tax Review Commission comes in. We can provide you with hard facts. We can provide you with statistics. We can provide you with numbers, revenue impacts, or who gets affected, what are the ins and outs of these things. And so that's where we come in and able to help. And we give that information to the consultant too. So they typically will, get that information from us, or if it's not already published in one of our reports.
Yeah.
Just
Go ahead,
maybe
Mark.
one thought, and this really relates to who we pick as a consultant. I really like the UHERO idea, not just because we know them and they do good work, but we don't have to reinvent the wheel on educating them about Hawaii or the Hawaii economy. I mean, for example, if we wanted to figure out what the food expenditures are, they may have that data. And then we can take that data, and by bars, you can then use that data with your staff. I mean, I could see some real, built-in benefits with UHERO, being more collaborative and basically, taking advantage of all the knowledge they've already acquired, and they're experts.
I would agree with that,
Yes.
but I guess, do you think UHERO would be good at understanding what other states are doing in terms of tax policy?
I think they
That-
could go find out. They are currently, I'm actually working with them on a project, thinking about the state economy, how to revitalize it. And they are looking at, for example, economic development authorities in other states and actually other countries. There's a guy named Stephen Bond Smith, who's a UH economist professor, and his whole specialty is around economic development. And he's from New Zealand, so he kind of has that outsider perspective. But I've been impressed by the quality of that part, looking at other places. And their most recent stuff, which, for example, as I said, ranked Hawaii with West Virginia, Alabama, and Mississippi. They're really starting to do that in their work, kind of comparing it. And I think the other thing also is DBED has a bill that would require require the state to monitor the CNBC state competitiveness ranking. As you know, economic competitiveness, you know, workforce education, new business startups and all that. CNBC does apparently this ranking every year. And DBED has a bill to institutionalize that as a state metric, which would suggest they're looking outside. But you know, UHERO, I think, could help with that.
Yeah, I'm agnostic on that question. I mean, I helped the last commission as a consultant because I was working at the department, just drafting the report. And they used UHERO as a consultant, and it was great. And then previous ones have used outside, so I'm agnostic on that. Thanks, Mark.
Yeah, I mean, I can't say my view one way or another, but I work with UHERO. We do research together, and we have a collaboration already. I'm not sure how much time they have or whether how amenable they would be. Like, so that's the thing. Like, so it's good to explore. Definitely, it is, if there's an interest, if they can do it, So, and then the evaluation committee can decide if that's something they want to work with. But that would be another question. Just putting it out there.
Right. So the narrower we make it, the more likely UHERO would be able to do it. And that's outside the procurement system, so that's a lot different. So if there's something that you have in mind, Mark, because you know more about UHERO than I do, then we can dial that in and get them, and then something else can go out for a general bid.
Yeah, let me throw this one out because I think I threw out last time this idea of the competitiveness, how well does our tax system fare against the other 49 states in terms of encouraging business activity and ultimately more revenue for the state. More activity means more revenue, tax revenues down the road. I think my question to a consultant would be, what are the ways we can make the Hawaii tax system more competitive? But basically, how can it support and encourage more economic activity while still raising the same amount of funds it does now? So I don't want them to get into, well, if you cut taxes, you'll create all, this trickle down idea. I don't want to go there. But let's say you just had the baseline requirements, you got to raise the same revenue. But how would you make the tax system more responsive to, new businesses or individual entrepreneurs or existing companies who are here? I mean, all of the above. How do you encourage more? Ultimately, that's what we all want. As a place to live, we want a vibrant economy, and a vibrant economy ends up giving us much more tax dollars to use. So I kind of see that as a win-win. And so if you just sort of fix them on the amount, but then just how do we make it better, within that constraint? I think it'd be really interesting. And I could see UHERO really kind of getting pretty excited about something like that because it would dovetail with the work they're doing right now.
I like that because when I hear that, especially with the fixed amount, I hear opportunity for a consultant to get very creative. And so it's just a matter of our appetite for how creative we want to be in our report. Like, would we be okay making some big shots or taking, making some big claims and big recommendations. I'm open to it, but I'm only one of 7, and I'm just Trent Dilfer here. So, but I like that as a prompt. I think that covers a lot, but we had it certainly covers competitiveness thing you brought up last time. I think that's but I don't want to leave behind, or I don't want to. I want to talk about the other few other things as well. So, let's see, retirement. I'm glad Baybar's mentioned that the deductions, because when I was helping the last commission, that came up and they wanted this thing in it, like the transition. It's the pensions don't get taxed, but the people that have contributed haven't gotten a deduction. So if you're going to tax them, then you have to adjust for that deduction they didn't get, or you're just burning the other group instead of the other group. You see what I'm saying? So, because like a 401k, you get a deduction and then you get taxed, or vice versa. This pension, you're not getting taxed on the end, but you didn't get a deduction. But then, so if you're going to tax them, then you have to adjust it for the deductions that they would have gotten. And then there's like this time value of money question and all that. And then there's a third group of state workers. And I said this on the video last time, like my mother-in-law that worked for Hawaii for a long time ago, they never were in the contributory system. So they never contributed. So for them, if you started to tax them, they wouldn't get an adjustment for the deduction. So I think that's a valuable topic, and it is a source of inequity. But it's complicated to deal with. I don't think we would need a consultant for that. I think that's a matter of us identifying that, putting forth some ideas, a timeline, an amount, as John said, stuff like that. So I guess I'm just trying to triage these for what we're going to the consultant with, because that's what's kind of got me anxious, is the timing on this. Last time I heard I've got wealth tax here on my list. Last time I heard that put out, and then today I heard maybe not. So is that so I don't remember who brought it up last time. I remember it was mentioned as maybe not a topic we wanted to cover this time. I'm agnostic on it.
I think I may have brought it up, but I
Okay.
would say the state economy, how does the tax system help a state economy be more competitive is more important right now.
All right.
We're losing population, kids are leaving.
Cool. Climate change resilience, I keep messing that up. To me, well, what do y'all think? Is that, to me, that's not something that can be brought up if we're saying fixed amount, because that's like amount of like some, mega amount of money, even without having seen any consultant report. So is that a question of identifying if we want to, or determining if we want to ask two different questions, two different RFPs, and possibly have the same consultant do both, or have two different ones do one? Jeff, please.
Wasn't that Governor Green's fee, the green fee, wasn't that for climate resilience and environmental protection? Would we be going down a road where that's, I guess, I'm not gonna say solved, but addressed, or
Doubling up.
Yeah, I don't know, just saying. Again, another thing I don't know enough about, just to be dangerous. So
I don't know about the fee. I think it was for something. Somebody else want to talk about that? I don't know anything about it.
I think it's more, I mean, you pay the fee like when you go to state parks, or like Hanauma Bay, I guess. And it's really to fund maintenance and improvements of those kind of public facilities, I think mostly. I don't think it's going to raise enough money to address climate change, though.
I thought this was I'm talking about the tax revenue one, like the hotel tax one. I thought it was a tack on to the TAT.
You talking about the cruise ship one?
Well,
I think
TAT
the
has
cruise
been raised. TAT has been raised by 0.75%, and then the governor is supposed to receive some proposals to use that money that is identified of this additional TAT.
Okay.
So it turns out the other green fee that was originally circulated would be violating commerce close, like interstate commerce clauses, and you can't discriminate. So so this was I guess like a second best option to use an existing tax. But yeah, again, we do revenue estimates on them, but if there's anything further that can be looked at, so information, fact-based things, that's our office is able to help, because even if you commission, a consultant to work on these issues, there will be a lag, right, in time. So yeah, so facts, statistics, we can definitely provide those.
I'd be curious to see, I don't know if this would be like a bullet point under the competitiveness issue, but how the TAT specifically compares to how competitive it makes us to other states. I do think the increases in TAT has, anecdotally, I feel like it might have hurt the tourism. Just because it's so high, but I don't know how it compares to what other states are doing either.
Thanks. The next one on my list I was going to bring up and see if anybody wants to offer a prompt is housing affordability. I have here, it says policy shaping housing affordability. This seems like a big issue, and I don't know, discussion. Is that an opportunity for a consultant? And if so, ideas for a prompt?
Could it just fall under the whole prompt of like, how do you creative ideas to make it better? Because I guess housing is all part of that, and then people leave because they can't even afford to live here. So it's sort of like umbrellas, I guess, under that.
Maybe we could just define that more to address for the study to also address the housing affordability, right?
Yeah, as part of it, I guess. Because could we ask the general question and kind of like, and I guess within it to address these potential topics, if they could help or anything. And sorry, I'm back to the pension thing. Like,
Right.
I thought the exclusion is for employer funded pension.
Currently,
Right?
yes.
Yeah, so
Yeah.
it's not for employees who funded their pension and didn't get I mean, yeah, I guess if you funded it and you didn't, it's kind of like a Roth, right? I mean, you defer with no deduction, but I thought the pension exclusion is for employer funded pensions. So not funded by an employee, but by an employer. So it's not income that was taxed by the employee and then later not taxed. So
Yeah, but I think that the state pension is one of those, and part of that is funded by employees' contributions. They take money out of the employee's paycheck.
So it is taxed
there's no
upfront.
deduction.
So at the
There's no
federal
deduction for
level,
it.
the contributions that employees make
Deduction.
towards their pension plans is not taxed at the federal level, but it's taxed at the
deduction.
Hawaii level. So
Right.
you tax them upfront. So like currently you need to contribute, say 6.6% of your gross salary towards those pension plans. It's taxed as regular income. Whereas your contributions that you make to a 401k are not taxed when you make those contributions. They're actually exempt from your income. So there's that effect. But go ahead, Jonathan.
To put it a different way, when you look at a state worker's W-2, a state worker that started after whatever date in 1998 or whatever the date was, the federal wages and the state wages are hugely different by 6%, basically, because of that deduction. So that's what I was getting at with the last commission. When I went and wrote some stuff up for them to put into the report, I had to address that. So for some pensions, for the state pension, it is not taxed on the end as an employer pension, but a portion of it is funded by employee contributions. Now, like I said about my mother-in-law earlier, for employees that started in 19 whatever through whatever date, they change it sometimes to kind of adjust. But at some point in time, it went from a non-contributory system to a contributory system. And there was an option to switch, or there was an option to stay on. And then employees starting after this or that date had to contribute. So I started in January 2013, and my wife started with the state in 2010. So she contributed 6%. I contributed 8% because I started after the date. So it'll change as it goes. But at some point, it changed from a non-contributory to contributory.
But when you get your ERS 1099, there's just no Hawaii taxable amount. I mean, whether you were part of a contributory or non-contributory plan. So I think the exclusion that John is referring to is like the exclusion on employer funded pensions.
Yeah, I think we're talking about two different things. I think Jonathan's talking about the contributory plan, those contributions. I was referring more to the the exclusion of the pension exclusion, TIR, the 96-5. Just examining, is that the fairness aspect of that? I mean,
so when you say that the pension exclusion, that's exclusion from income.
So Hawaii tax law, the way it reads is if it is an employer funds, then it is exempt from state tax. If it is employee contributions, then it's taxable for Hawaii tax. So if you have contributory plans like 401k, it's hybrid. So the employer the monies that you put in, that you defer, are taxable on the way out, and the monies that your employer puts in would be exempt. So you got some kind of hybrid issue on that. Older plans, the defined benefit plans, those are generally exempt because the employee didn't put any money in. Those are way of the dinosaur though, because they cost too much. I mean, most companies will not do defined benefit plans because the cost is just too much. But just a way of, I think if we address it and look at it, I mean, it might be a way where we can address, because I'm looking at someone like that contributes to an IRA, like a person that generally contributes to an IRA, and that guy's got to pay tax when he takes it out. Versus, someone with a humongous pension, large pension, they wouldn't pay any tax, if it's employer monies.
Okay. We'll have to discuss this further. We can discuss this.
I think last year's report touched a little bit, but it was, I think what you were just saying, Jonathan, is right. It was more toward, do I get a deduction and some other issues, but I was looking more at just the deductibility or the taxability of pension plans in general, and the fairness of it. I mean, I'm just throwing stuff out.
No, it's a good. As I told the last commission years ago, it's a source of inequity, and it's valuable to look at.
The other reason I say, if you throw out a number, the compliance issue for the department is a lot easier, because when as a practitioner, when I see people, when I get returns from H&R Block or out-of-state preparers or whatever, they just exclude the pension. They exclude the retirement plan. It could be a 401k and they exclude the whole thing. That's not right, because only the employer contributions are exempt. So I think there's a lot of non-compliance just in the fact that people don't understand the rule, and some people are excluding it, the whole thing, just because they thought it's retirement. If you set a number like 25,000, 50,000, I don't care at that point, right? Whoever you take out money, guys at a lesser income rate won't pay any tax. Guys that get large amounts, they can probably afford to pay a little bit more in tax. I mean, just my thoughts.
I agree. Yeah, I've seen a lot of non-compliance from outside.
Yeah, I'm sure you've seen that with your clients. New clients, you get them in and they're like, you ask them and they're like,
they just think, oh, retirement is tax-free in Hawaii.
Yeah, I get that all the time.
Not all of it.
Yeah.
Not all of it.
So I think for a compliance issue for the state, the Department of Tax, fairness issue, just something to look at. I mean, I'm not saying to do it, just something to look at.
Yeah, absolutely. I think we'll have time, because as I said, I don't think this is one that we'll need. I think we got what the expertise we need on this call. So as if we're waiting for a report, we can discuss this at length. So we're running out of time here. I don't know what y'all think, but this has been a tough meeting, and I think we've gotten somewhere. I think we've moved forward. But I want to skip a couple things and get to the end. So the next one was long-term financing. That bill did make it. It was a triple referral, so it missed the deadline, but they re-referred it so that it would go, and it crossed over. So that tells me somebody's serious about it. There's a hearing tomorrow. I'm going to try to go. It's at 1 p.m. And the idea is to listen, but maybe to chat with some people and see if they won't maybe present to us. Because I don't want to waste a lot of time if they're going to pass the bill, because the bill's way more robust than anything we could do on this topic. So if anybody else wants to go to the hearing, maybe I'll see you there. It's at 1 p.m. tomorrow. The bill is HB 1804.
What committee is it in?
It's on the Senate side, so it's whatever the Health and Human Services type committee is. I'm not sure what they're called anymore. Any discussion on that? If not, I'll just keep trucking and we'll get this done. So discussion of in-person meetings is the next thing up. I'm just going to put that off unless there's some objection, and we'll discuss that later. I still want to do that. So next meeting agenda, I want to skip that too and talk about scheduling of the next meeting, and then we'll talk about the agenda for the next meeting. So I'm not seeing any objection to that. So scheduling the next meeting, as I've said many times, I'm getting anxious about the timing. So I want to propose to meet in about 2 weeks from now instead of about a month from now. So if we were to meet the 2 weeks, the month from now, that would put us on Tuesday, April 14th. And that is crunch time for some of us, some of y'all. And also, if we put it off a week to then, April 21st, it's getting even later.
Sorry,
So
I thought
the
you said you wanted to meet in 2 weeks.
I want to try to meet in 2 weeks from now, if we can.
2 weeks is not April 14th, right?
That's what I'm saying. A month would be April 14th. That's why I'm trying to meet in 2 weeks from now.
Oh, okay.
Yeah. I'm giving you the reasoning for trying to meet in 2 weeks.
Oh, I see. I see.
My bad. So the week of March 30th is what I'm proposing. Is that possible? I know I'm surprising y'all with this. So if it's not, it's not.
So after March 31st, is it gonna come back to once a month again, or?
I was hoping to discuss that at the next meeting.
Can we hone it in the agenda to, because I'm guessing we're just trying to get, we're trying to hone in the specific question and the bullet points, sub-bullet points of the question. So maybe if we come with, everybody comes with some general idea of what question they want to raise, we can raise 7 questions and say, mesh it, take a little bit of here, there, this person's that person, go, okay, here's our question. Whether we like Hero can do it, okay, great. And then that's like one agenda item and done. So we can not.
That's what I'm hoping for the next meeting. That's exactly what I'm hoping for the next meeting. Matter of
then
fact,
all right,
we
John.
have to. Or we're going to run out of time. If
You're
we don't.
killing me, but no, I'm just kidding. Okay.
So, but question to everybody, I know I'm asking a lot, is the week of March 30th, can we do it? I'm open to any day that week. It's the week of April 6th is also on the table.
I'll be in Tokyo. Doesn't mean I can't call in, but it would be better for me on a Friday of that week when I'm back.
Okay, so March 30th week, let's see.
April 3rd.
April 3rd.
Third, sorry.
Yeah.
April 3rd is a state holiday.
State holiday. It's Aloha Friday.
It's
What is
it's a
April
Good
3rd?
Friday. Yeah.
Oh,
All right.
Okay.
What about the week of April 6th for everybody?
I'm going to be in Bangkok that week.
All right.
Okay.
Okay. So,
or maybe could Mark
Um,
call in then, and we keep it the March 30 week.
we can talk about that.
I think we
If
start
I-
pushing into like April 6th week.
Trying to get tight.
That's gonna just be really hard.
Too close to the due date is what you mean?
Yeah, because April
Yeah.
6th is the date that we need to post the RFP, right?
No,
Yeah.
that was just sample dates.
Sample.
Oh, okay. Oh, sample D.
That was
Okay,
sample dates to give a little timeline.
I see.
Yeah, I
Uh,
could try to work it out with my schedule over there, and then Thursday, I think I fly in on a red eye. I could do it. I mean, yeah, I'll try to work with you, Jonathan, or whomever with my schedule.
Like you
Well-
would be here Thursday, Mark?
Yeah, I land back, mid-morning, I think, late morning. So,
and that's on Thursday, the
The April
2nd.
2nd?
yeah.
Okay.
How does
And I
that
think
work?
I actually fly into some meetings too, so I have to say,
Like the 2
Yeah.
o'clock, April 2nd?
yeah.
You could do?
No, I think I may be flying into a meeting. That's my
Oh,
problem.
flying into a
Meeting.
Yeah. So,
But we can figure this out offline if that's okay.
well, I just,
I think we need to set the
yes,
date.
yes, we can sort it out, offline, I think. But I, is,
Sort out the date offline?
I'm asking about the due date right now. So the tax, April 15th.
Yeah, so
If I drop my 2-week thing to just go to that week, ordinarily that would be Tuesday, April 14th. Can we do that week, or is that not practical? We could do it Thursday that week or something. I'm just trying to find a date, without pushing y'all too hard. I know.
Yeah, that week is
April
probably
17th?
after the 15 will be good.
Okay. And then, I mean, because with Jessica's pep rally, pep talk about, coming there with it all, ready with questions and bullet points to set. If
Maybe
we
I'm
can
gonna
do it
oversell
if we can really get it done that day, then it's not too late. So that week is the week of the 16th. Tuesday would be I'm sorry. Tuesday would be the 14th. So I'm thinking Thursday, the 16th, if that's better for everybody.
Yeah, I'm good.
Let's see.
I can do the 1st of April at
1st
2.
of April. All right, let's back up then. How's everybody else on the 1st of April? Jeff? Yes.
I'm good.
I can do 2 o'clock.
2 o'clock?
I'm okay.
Okay. There is Stacy.
I can try to do there's a chance I might have to, that's a really, really hard week for me, but I can, right now it looks very tight in that window.
Okay.
Um,
Okay. So, let's, so you can send stuff in written to ByBars, or to any of us. Well, not to us, just send it to ByBars, just in case, Sunshine Law stuff. And then we'll try to make the meeting. That'll be 6 of 7. And I guess that's as good as we're going to be able to do. I'm happy with that. It gets us a couple weeks ahead, and that's an important couple weeks come December.
I just that
All
one
right.
agenda item, yeah.
Yeah, I'll set the agenda up, and it won't be very many agenda items. Approve the minutes and work on this. And I'm going to show up ready to push everybody to sort that, and seems like Jessica will too. Thank you. All right, April 1st, 2 p.m. Last time we took a vote, so I'll ask for a motion in a second so we can make sure this is right.
I move for April 1st at 2 p.m.
Okay.
Second.
All right,
Second.
let's vote by show of hands. All right, thanks everybody. Sorry for springing the 2-week thing on y'all. Thanks for your help. So the next item on the agenda is, well, any other comments before we close? We're in overtime here, 2 minutes. All right, I appreciate it. We're getting closer. I appreciate your help. I'm going to adjourn the meeting, 4:03 p.m. Hawaii time. I'll see y'all on April 1st. Bye.
Thank you. See you all.
Thank you.
Thanks. Bye, Barth.